In this video, we will review how you can make withdrawals from your Supplemental Retirement Plan, often referred to as your SRP account. This plan is administered by John Hancock. In addition to your more traditional pension plan, the Mid-America Carpenters Regional Council also offers a defined contribution plan. Your defined contribution plan is intended to support your defined benefit pension and give you an additional stream of income during your retirement. It functions similarly to a 401k. However, unlike a 401k, you cannot contribute directly to the Supplemental Retirement Plan account, and all contributions are paid over and above your salary by your contributing employer. There may be times in your life when you may want, or need, to make a withdrawal from your SRP account. During those times, you will need to determine what kind of withdrawal best suits your situation. A distribution election, also referred to as a termination distribution, is made when you are no longer working, and in-service withdrawals and hardship withdrawals are available under certain circumstances while you are still working. We will first review the distribution election. A distribution election allows you to withdraw all or part of your account balance once you are no longer working. To qualify for a distribution election, you must meet at least one of the following requirements. You are at least 60 years old, or you are collecting a defined pension benefit from the Mid-America Carpenters Regional Council or another pension fund with the United Brotherhood of Carpenters and Joiners of America. Or you are totally and permanently disabled. Please note, if you become disabled, your physician will need to complete the medical examination report form as proof of your disability, or, if you qualify for disability benefits from the Social Security Administration, you may provide that award letter. Or you have not received a plan contribution in the last 24 consecutive months. Or you have not received a plan contribution in the last 12 consecutive months and your account balance is less than $5,000. If you qualify for a distribution election, you may elect to have it paid as a lump sum directly to you, rolled over to an IRA or other qualified retirement plan, or have part of the benefit paid to you, and part of it rolled over to an IRA. If you wish to roll over only part of the funds, that portion must be at least $500. You may also elect to receive your account balance in installment payments, either monthly, quarterly, semi-annually, or annually. If you choose to receive installment payments, you may change the amount or frequency of the payments once in a rolling 12-month period. If you qualify for a distribution election and do not wish to receive your full account balance, you may withdraw part of your account balance, and the same payment methods above apply. However, if you choose to withdraw part of your account balance and then elect to make another termination distribution within the same rolling 12-month period, your second distribution must be for the remainder of your account balance. If you are still working, you may still make a withdrawal from your account. However, it is more limited in what you can receive, and the rules are more restrictive. Eligibility for an in-service withdrawal is based on your age, the contributions received on your behalf, and what, if any, withdrawals you may have made previously. You may apply for an in-service distribution once in a rolling 12-month period. If you qualify for an in-service withdrawal, you may elect to have the benefit paid directly to you, rolled over into an IRA or other qualified retirement plan, or have part of the benefit paid to you, and part rolled over. If you elect to split the payment, the portion rolled over must be at least $500. If you are over age 59 and a half, you may withdraw up to 100% of your current account balance. If you are younger than age 59 and a half, you may withdraw up to 100% of your current account balance, excluding contributions made within 24 months of the date of distribution, and deducting the amount of any withdrawals you may have made previously. Please note that an in-service withdrawal can only be made once in a per 12-month rolling calendar. Let's look at an example for a member who is 55 years old. His current account balance is $11,000, and he submits an application for withdrawal on June 15, 2023. Of that amount, $5,000 is contributions that were made between June 15, 2021 to June 15, 2023, or the 24 months preceding the date the application was received. Therefore, that $5,000 is not eligible for withdrawal under an in-service withdrawal, and he would be eligible to withdraw the remaining $6,000. In another example, let's look at a different member who is 40 years old. She has a current account balance is $8,000. The contributions made within the last 24 months total $10,000. However, She made an in-service withdrawal of $2,500 last year. Therefore, because all of her current account balance is comprised of contributions made within the last 24 months, she is not eligible to make an in-service withdrawal. A hardship withdrawal is for a financial hardship, which the IRS defines as the situation of immediate and heavy financial need. In addition to the paperwork, additional supporting documentation is required for processing of a hardship withdrawal. Under our plan, hardship withdrawals are available for 5 specific circumstances. First, the purchase of a principal residence, not including mortgage payments. Next, the prevention of eviction from or foreclosure upon your primary residence. Third, for tuition, related educational fees, and/or room and board expenses for the next 12 months of post-secondary education, education requiring a high school diploma or GED, for you, your spouse, your children, or your other dependents. Next, for medical expenses not covered by insurance that were incurred less than 2 years prior to the date of application for yourself, your spouse, or your dependents. And finally, for funeral or burial expenses for a deceased parent, spouse, children, or other dependents. The rules of a hardship withdrawal state you are able to withdraw up to 100% of your account balance, or whatever the documentation you provide in support of your hardship shows you need. If you submit documentation showing you need more than your account balance, you will be approved for your full account balance. If you submit documentation showing you need less than your account balance, you will be approved for the amount in your documentation. Hardship withdrawals are only available to be paid directly to you, and are not eligible for rollover. Now we will take a look at the way withdrawals are taxed. Keep in mind the tax rate varies based on the type of withdrawal, your age, and whether you collect the money or roll it into a retirement account. Any withdrawal from your SRP account is considered to be taxable income. For a termination distribution and in-service withdrawal, if you elect to have all or a portion of the benefit paid directly to you, that amount will have 20% withheld for federal taxes. If you are rolling over to a Roth IRA, different rules may apply. Speak to your financial advisor for additional information on rollovers to a Roth IRA. For a hardship withdrawal, the default withholding for taxes is 10%. You may also choose to have no taxes withheld, or increase the amount withdrawn from your account to include the 10% federal withholding. If you are younger than age 59 and a half, you may be subject to an additional 10% federal excise tax for early withdrawal from a retirement account. For more information, the Supplemental Retirement Plan summary plan description in the video description. You may also contact the Retirement Benefits Department with questions at 312-787-9455, menu option number 4. Please be advised that although fund office staff can discuss the options available to you, they cannot advise or provide the dollar amount that you are able to withdraw. Should you wish to make a withdrawal from your SRP account, contact John Hancock Retirement Plan Services at 855-312-2722 to speak to a representative who will be able to provide the amount you have available for withdrawal and email or mail you the necessary paperwork for withdrawal. You may also log onto your account at myplan.johnhancock.com for the same information. This video is for educational purposes only and may omit information or limitations on benefits. The content in this video is not binding. The rules governing the plan are found in the plan document and related plan amendments, which can be accessed on our website at the link in the video description.